morning, everyone, and welcome to another episode of the Property Trio. Today, we are talking market update. So we have got all of March's figures in our hot little hands, and to disseminate the data, that's good alliteration, isn't it? I've got Cate and David.
G'day. Good to see
morning.
you.
All right. Let's get straight into it because there's a lot to unpack, and we've got a few little Easter eggs, some different data that we're going to talk about today. But the starting point, as always, is the index results as at the 31st of March 2024, and it's a kind of a nice little story because the big movers are side by side in the table. Brisbane, Adelaide, and Perth are the perennial performers this quarter, and of course this last month as well. One big surprise I want to go to you, Cate, is because I circled Melbourne and then put question mark because you called it last week that you expect that to turn around. Now, I don't doubt your coalface knowledge whatsoever, but is it just a month too early?
You know what? I did circle in on this as soon as the data came out because I promised our listeners that I was so confident that we'd see a dramatic increase, and we're down 0.2%. So I clearly got it wrong. And I asked myself, did I get it wrong because I called it too early and the data lag is yet to continue? Or did I get it wrong because I'm not privy to the broad sales and the broad coalface? And in saying that, what I mean is, as a buyer's advocate, I'm selecting properties that ideally don't have flaws or have forgivable flaws. And often you find that a lot of us circle in on good quality properties, not just other buyers agents, but other buyers as well. And so the properties that I'm going for, you should anticipate that I'll have more competition than a property that someone untrained would select. And what I'm saying by that is I'll pick a crowd-pleasing property. I'm more likely to. And if I'm feeling hefty competition and seeing reserves pushed on a quality property with multiple bidders, that doesn't necessarily mean that every property in Melbourne is experiencing that kind of competition. And, you know, that natural bias or that twist to my coalface versus the normal coalface, I've got to face up to that. So I think that's what's been happening because I went through all of the auctions that I thought were competitive. I talked to a couple of local buyers agents that are mates of mine as well. And I just think it's fair to say to listeners that when I've got a view of what's going on in the marketplace, I am all over the place, but I'm not at every single auction by any means. I think that's what's happened because Melbourne is down 0.2% and, you know, call logic versus Cate Bakos. I'm not even going to have the argument.
Yeah, but I think, look, I commend you for your humility. I think it's always going to be the case that you are operating within small pockets and you're operating within properties that are likely to have competition because they're the pick of the bunch, right? But
You'd like to think so.
Yeah, and this is macro data. This is big Melbourne, and segmentation comes into it as well. I mean, we've talked about it before. Like median house prices are, you know, they're good because it's big data, and you've got to have some anchor point, some standard candle to navigate through the universe, right? Look that one up too. I learned about that, but that's a tangent I'll get in trouble for in the reviews.
Just give us the brief. What's the standard? What was it? Standard candle?
Standard candle. Yeah, it's an astronomical kind of constant so that you can measure distances in space. It doesn't sort of move. And like the standard candle for the Melbourne market is the median house price. But if we see a huge proponent of units selling as distinct from houses, then that's going to pull that figure down. So I don't know. I think you might be a little bit early or there's something weird around that median, because if you're feeling it, I do think it speaks to the general market. I think even in a small pocket, you can get a litmus test of a greater thing, but time will tell, right?
Yeah, and look, markets within markets as well. I talk about all kinds of different markets, but I've been doing a little bit of activity in Thomastown and Laylaw in Melbourne. So for, you know, all of those northern suburbs people out there listening, little shout out to you. The agents are already talking about the pace of movement there. So, you know, it was one that came off a little bit during 2022 and last year, and it feels like it's fired back up again. And so there are always markets that will do that kind of activity or outperform others. And maybe I've just been active in some of those patches. I don't know, but it certainly has felt like a more heated, stronger market to me.
Mm. What are the takeaways for you, Dave, in the March results?
A few things. First of all, I'd say I think Cate's assessment is accurate, and I think it's a good realisation. It doesn't mean that Cate can't pick up on when the market's moving or the direction of the market, but there will be times that her sample size is such a small micro part of the market that it will be off kilter to some degree of as to what's happening in the broader macro picture. And I think that's a really good assessment to make, and a really independent perspective to be able to share with our listeners. So, well done, Cate.
Yeah, I mean, we
Try
are
to
very
keep it
spoiled.
real.
We are very spoiled having her in the mix as the only person that's regularly going and attending these auctions and these inspections. And your data is very valuable to us as well, Dave, but it's a different type. So just as a recap, over the quarter, we've seen Brisbane grow 3%, Adelaide 3.3%, and Perth 5.6%. And Perth, of course, won the month of March at 1.9% increase, which is having it sit on a 19.8% annual average, which is just bananas. And it's now 50 grand more than Perth from a median price point of view. And I remember when it wasn't. No, so Perth is humming along. Let's talk
Sure
about.
is.
Let's talk about. Oh, sorry, Dave. I'll go to you.
Well, a few takeaways I've had from this month. I think one thing, if we look at every city has had growth over the last 12 months. So, all the doomsayers, we've just come off the fastest rise in interest rates of all time. And the combined capitals have increased almost 10% over the last 12 months. So 9.7%, which is reasonably phenomenal. And I'd be fair to say very few people, if any, would have predicted that 12 months ago, given what we've just come out the other side of. So, I think, again, it just really should highlight to our listeners that there are key drivers of the property market outside of interest rates that create demand, reduce supply, and I'll actually go into some of those in this episode, that actually drive property outcomes. So it just isn't as simple as what's happening with interest rates. Now, sure, we've got a really broad spread. We've got Perth, 19.8% capital growth over the last 12 months. At the bottom end, we've got Hobart of 0.3, slightly in positive territory. And we've actually got, Darwin 0.5, Canberra 1.9, Melbourne 3.2. Then you've got Brisbane up the top, 15.9, Adelaide 13.3, Sydney 9.6. So there's quite a bifurcation of markets across the country over this 12-month period. So I just want that to sort of settle on our listeners a bit, because we can oversimplify what's happening with the property market. It's a good example of markets within markets. Again, it's still a macro level because it's capital cities across the country, isn't it?
Yeah.
But there's still markets within markets on the suburb level, or what I would call the micro level, which is precisely what you were talking to at the start of the episode, Cate, and your experience.
Yeah, very much so. And, there's a little bit of investor fever that we have to circle as well. And when I say investor fever, we see this when a city has a really good run. And it's arguable that Perth is not just getting owner-occupier activity. It's been absolutely swamped by investors from all around the place, not just Eastern Seaboard. But I've had 3 phone calls this week with prospects, and they've all said something in common, and it made my ears kind of stand up. Each of them said, "I'm talking to you because I'm interested in Melbourne. I think there's an opportunity there." Now, that's obvious. There is an opportunity because we've done so badly. They're wondering when that elastic reaction will kick in. But not just that, they're looking at some of our growth drivers. They're looking also at where new arrivals are landing. They're looking at where there's infrastructure spend. And anyone could argue with me. There's a lot of investors out there that aren't interested in Melbourne and Victoria. We'll talk about that in the data going forward. So I don't want to sit here saying that Melbourne's the place to go. But what I'm saying is 3 people independently were talking to me about Melbourne as an opportunity. And each of them said, I had considered Perth and Brisbane and Adelaide. And when I've tried to dunk my toe in those markets, it's felt too hot. And when an investor says, I'm hands-on and I've tried to give it a crack myself and it feels too hot, they're all of the things that we all know about and recognise. You know, when properties are selling as soon as they hit, when your days on market are literally just a couple of days, when competitive bidding is driving a property to go over and above where anyone would have pegged it, when vendors' reserves are getting smashed. They're hot markets. And for some investors, they'll stand back and say, wow, do I want to play a part in that? Or where is it at its peak? Because do I want to be the one when the music stops who hasn't got a chair in the room? So I'm not suggesting that Perth's at the top of its cycle. In fact, I think it does still have some steam in it, but there are some commentators out there, some property professionals and some forecasters that have called it about Perth. It's really interesting. You were at the same presentation I was, Mike, when I was sitting up the front with Terry Ryder and we were on a panel, and he feels that Perth has had its run this time round. I'm not so sure that places have a run and then suddenly stop, but we certainly know what it feels like when the music stops.
Yeah, and that was September, October that he mentioned that as well.
Yeah, so, it's given us a pretty good continued belt of performance for the next 6 months. So I do question that. I think Terry's work's amazing, by the way, but it's very hard to say when a good run is about to stop. But what is important is to work out whether it's owner-occupiers and investors or predominantly investors who are fueling price growth, because that's when you're getting into bubble territory.
Yeah. And the big risk too is that markets tend to overshoot. So overshoot when they're on the upwards run and overshoot on the downward slide. So the risk there is that because of the frothiness in the market, it keeps going beyond the fundamentals, which means you're then caught in a position which, you know, Perth has an absolute history of doing, is overshooting way too far. And it was the last capitals. It took, was it 12 or 15 years for Perth median to get back to where it was?
16 it was.
16. And that only happened in the last 12 months, you know, so there is a risk of that happening again. So you've got to start to wonder, where is it at in that cycle for those looking to get in after a 20% run over the last 12 months. And, you know, even if you look at the more macro picture, I think off the top of my head, I do have some data down here in amongst all my
For anyone not watching on YouTube, Dave has gone to the floor to collect his data.
Yeah, I was going to say, for those that can't see us, and Dave's audio is like not at its usual amazing precision.
I'm on holidays.
He's in his mum and dad's bedroom in a really sunny place up on the New South Wales coast. Lucky thing. We couldn't get his Bluetooth working, so he's just yelling into the computer. Super sophisticated setup.
So
he's Dave's floor data.
So Perth has run 56% since the onset of COVID.
Whoa.
Okay. So Melbourne, 11%. You know, Sydney, 25%. There's got to be some elasticity in there, you would think. But look, Brisbane and Adelaide, 55 and 57% as well.
I marvel at Adelaide. Honestly, I saw something that Pete wrote in the PIPA newsletter. I thought, ooh, this is good. It's juicy. He's pegging Adelaide to outperform. And I should share that in the show notes.
Continue.
Yeah, recently.
He must be so happy.
He's super happy. His divestment plans have been delayed, I reckon. I'll have to ask him.
Yeah, don't sell now, Pete. Wait a little bit. Yeah, look.
But he's listed his growth drivers, and that's what I love about Pete. He's happy to put his opinion out there and be proven wrong, but he always backs himself up, and it's a very good article.
He backs himself up just about as much as he backs Adelaide up.
I said
That's
to
okay.
someone once that, like,
Right.
Pete, I love that Pete's in the industry because he doesn't really sell anything. Like, if
Yeah.
you want to,
Yeah.
if you want to do a Masters of Property program, he'll sell the hell out of that. But he doesn't sell property. He's got no vested interest in anything. And then the person pinged back to me and said, "Oh, except Adelaide." I'm like, "Yeah, he flogs the hell out of Adelaide," but he does it
I
academically.
don't think he single-handedly made Adelaide outperform.
I'd like to think
He'll
he has.
try.
Yeah.
He'll
I
certainly
was-
try.
I was just thinking about Perth though, guys, because I mean we had that contentious episode about Perth, and I stand by the information that was shared. None of us have said don't buy there. And we're all very cautious when it comes to looking at long-term performance and cycles as well. And I think we're very fair about that. But the question that I've asked myself about Perth and its stellar run is, is this being fueled by a healthy blend of owner-ocs and investors, or could it be more fueled by investors? And I think between the three of us, we could shed a little bit of light on that, not in this show. That'd take longer than that. But Mike, you've got such good data on investor activity.
Mm.
And Dave, you're very good at deciphering lending activity. And I just
Well,
love
hopefully
looking
more
at
than just
stats
lending
and
activity.
patterns. Well, but we've got that information is what I'm saying. So by state, we can break down the lending activity, even down to owner-occupier versus investor. And I think between the three of us, we could have a reasonably healthy conversation about whether we think it's investor fueled at the moment or whether it's still got potential there to continue doing what it's doing.
Another show, I think, but I think it's important, like, to say to the listeners, because that Perth was a contentious episode, and I get it because our data is showing that a ton of people have invested in that market, and no one wants, a podcast to say Perth's no good, and then that influence sentiment or question their analysis. We're not questioning anything other than we feel like it's our responsibility to exercise a little bit of caution and say, look, what we're worried about is X, Y, Z. Like you said yourself, Perth has got a way to run. I think it's still got a way to run, but it just makes me wonder on the other side. And I think that a hotter a market gets, the more likely it's likely to overshoot by a significant margin. So we just care about investors buying something that's got long-term fundamentals. It's nice to have that sugar hit of the growth to begin with. And some people have had such a sugar hit that it kind of will sustain them for 5 years. But just because we care.
Yeah. Look, and I think a real advantage for you, Mike, and myself is we don't buy or sell real estate. So, it's easier for us to be independent with our views and perspectives. I might have some bias towards Melbourne. You might have some bias towards the mighty Newcastle. But we hopefully, have that over most people in the property industry and most of buyers agents or sell property. So, that's, I think, another advantage of our perspectives and what we bring to this podcast. In terms of Perth, I've actually got some interesting data on Perth, and a big part of what's causing the Perth outperformance is migration. So the latest ABS population data showed some extremes in both interstate and overseas migration trends for WA more broadly. So net overseas migration to WA was running well above average in the last quarter, in the September quarter that ABS just put the stats out. So at 18,122 people, whereas the decade average is 4,639. So about 4 times as many people, were coming in from overseas to live in WA. But also just intrastate migration. So there was an extra 2,237 moving to WA from inside of Australia. Its decade average is -9, losing people, -96. So, so look, that's a big part of what's going on there. And so those demographic trends are playing a big role. I think people see opportunity with property prices, but also with jobs and, the resurgence in mining and, the wealth of the WA as a state.
That's fascinating, Dave. And, it's the lack of stock has compounded WA's problem as well for buyers.
100%. Yeah, 100%.
I want to try and segue into our next segment whilst at the same time sharing some WA data. So, let me know in the reviews if I've failed. So a media release we put out on Monday showed the top 10 locations for disparity in median rents and household income. So Byron hit the top. That basically said on the average income in Byron, you need to spend 60% of your wage on housing costs. Bananas, right?
Yeah.
And to be in the top 10, you had to be over, I think, 51%. Now, WA peaked at 47%. It didn't have any location in the top 10. And I think that kind of speaks to the fact that West Australians actually, on average, I don't have the data on this, but I think they earn a fair bit compared to other locations around the country, and their property and their rent is still relatively cheap. Now, I know that there's an asterisk I want to put on that because there'll be people at home screaming, going, "This is rubbish, I'm at the end of my tether." But the fact remains that it is more expensive to rent in other places around the country.
Yep.
Yeah, it's a really good example of what's
so
driving
rents
people there as well. So
that was my segue into rents. Yeah, I'm going to rate myself 6 out of 10.
Yeah.
Cate, we were talking off air about Melbourne houses versus Melbourne units, and if you look at the annual change in rents, like Melbourne's a second only to Perth. What's at play here?
Yeah, Melbourne's been interesting since we came out of COVID. And as you will both remember, we had colossal falls in asking rents. And I think we dipped as low as minus 13% asking price for units. And we're a bit of a ghost town. And since then, the units just soared. And we peaked at about 18% growth for units. And we eclipsed everyone at one point there. But we've come down dramatically with our unit asking prices. I mean, when I say dramatically, the 12-month differential is still 9.4%. So it means that tenants are still paying almost 10% more than what they were 12 months ago. But it was climbing at almost 20% at one stage. However, houses have been much stronger. In fact, our price growth for asking rents for houses eclipses that for units. And aside from Darwin, which is reasonably small, Darwin's at 4.4% for houses and 1.6% for units. Aside from Darwin, we are the only capital city that has a higher rate of growth for asking prices for houses than units. And Melbourne obviously had an oversupply issue for a little while there with units, as we all knew. We haven't had a lot of new building starts of late. And what this is showing is at 10.9% growth for housing asking prices for rents, that's still a very, very big figure. In fact, we're only number 2 to Perth, which is at 13.7. So what is going on with Melbourne houses and the lack thereof? We're losing a lot in from our rental pool into our sales pool. And while we do have investor activity that's ticked up nationally, it hasn't ticked up in Victoria. And I think this is playing out a little bit. It's housing and houses in particular that are really getting hard hit. And houses generally represent families. So I'm fearful that this isn't looking healthier. And 11% growth in the last 12 months on top of what we've already had grow, I think that's a really hard burden.
I think what houses have as distinct from units is a big percentage of land. And what has been the big news in Victoria is land tax. So I think there might be a correlation there, right?
It totally is.
I don't expect it to get much better because I'm hearing from a lot of property management departments in Victoria that they are just a hunting ground for their sales team, which is not good news for renters.
Particularly high-value properties, which I've spoken about before, because the land tax just gets so extreme that it's just not viable to hold on to, an investment property that you might have held in the family for a long period of time. And sure, this is towards the higher end, but it's just a killer, and it just makes holding that investment property unviable.
You're absolutely right, Dave. In fact, I've got lovely clients at the moment who had a plan to buy a period house in Melbourne for capital growth, and their tax accountant has run the numbers and said to them, maybe you should think about buying a unit. Now, I'm not a believer in avoiding an area that's about to perform or that you feel that will perform because of tax. I think that's a false economy, but land tax is significant, and a significant price tag property obviously will give you a strong land tax bill, and that's the concern that they've got. And pivoting to units, I don't necessarily think that's a great move if they've got the cash flows to sustain a house, but they've got to take it all into account. And your point, Mike, about land being impacted, it's absolutely true. And we've got a lot of investors in Melbourne who have held properties for a long time. And think about the types of properties that we used to share house and rent when we were at uni. Like we wouldn't ask the landlord for anything because we really liked being able to pay $50 a week each to rent it. So things didn't work, or it was cold. You just, rug up a bit more.
I came to love mold.
I'm not saying that's okay to have a house that has mold and is too cold, and we've got minimum rental standards, but our regulations are so tight right now, and all of our compliance testing and now land tax. A lot of these owners of properties that were beyond just having a bit of, Band-Aid treatment and duct tape. They need a renovation. They're looking at it saying it's just not feasible. I'm not cash flow rich, and maybe I'm, cash rich and not cash flow rich. I've got to let this thing go. So a lot of people are making that decision.
Look, yeah. Look, actually, just a few other data points on Melbourne that suggest it might be moving back to being a place where the numbers stack up to invest in, which we both talked about last month in the market update. And I thought, there were a number of data points that suggested Melbourne was a place to start putting your money in again, into again. So the yield is up at 3.75%. That's across the country. Yep. Across Australia, the yield's 3.75%, which is the highest it's been since October 2019. But Melbourne in particular, the yields jumped from 2.76%, the average yield, to 3.57%. So that's the highest it's been since 2015. So that's 9 years. The yield's at its highest point, which obviously makes a more superior return, notwithstanding higher interest rates for Melbourne. But it's a price signal. In the last 2 years, Melbourne prices have fallen by 4.1% on average. Rents have driven up by 21%. So
that yield just keeps getting juicier.
Yeah. I just secured a house yesterday for a client, and we're almost at 4% yield. I haven't done that in Melbourne in a long time.
Wow, that's more a Ballarat sort of thing, isn't it?
Well, yeah.
Yeah, that takes me back to 25 years ago.
And we're still going. We're still moving. Our rate of rental growth is far eclipsing our rate of capital growth.
Yeah,
we do need to keep moving. So
because you've got a 10:30.
Yeah, I got a 10:30, and
it's been the Melbourne and Perth episode. Really.
I'm only on
everyone.
page 3 of about 16.
That's all right. We don't have to cover everything.
We've got some vacancy data that we haven't been able to share for a while. So national vacancy at 1.11%. I remember anything under 2 being sort of crisisy. 2 to 3 long-term, that's kind of the sweet spot. And 2's pretty tight. Sub 2's crisis. And, the capital city's at 1.08. And
that's the headline, isn't it? That's scary.
Yeah. Brisbane, Adelaide and Perth are all under 1%. Adelaide and Perth are under 0.9%. Just absolutely bananas. And I want to ask a question, sort of sticking with the rents and vacancy theme. Is anyone surprised that given the huge amount of investment in WA, that Perth still is leading the charge for the annual change in rents, both houses and units, and it's got the second lowest vacancy in the whole country at 0.86%. But we've still got the tight vacancies and the high rents with a flood of investment. It's sort of like, to me, I would expect to see the data trending back the other way.
I'm with you, Mike. This was one of the reasons why I thought Perth isn't done yet.
Yeah. It's just not showing up in the data. Like, 'cause
it's not.
To
So it's too
Just to
hard to
give you
turn on supply.
Yeah. And just to give you a quick snapshot, Q1 2022, 9% of our investors were in WA. Fast forward 12 months to Q1 2023, then we're talking about a third of all of our investors were buying into WA. It's a huge increase, and no other place increased like that. There was only one place that actually went up, and it was like 1%. I think that was Canberra. That was just a weird outlier. Everything else went down because Perth stole the investors. So it kind of made me think, all right, well, eventually the rental pressure has to subside in Perth, but it hasn't yet,
No.
which just says like...
I think it's got a way to go.
We're not calling the top yet.
But yeah, I don't think I'm not calling the top for Perth.
No.
It's still got a fair way to go. But supply is the issue, and I'll give you a few interesting supply numbers across the country. So,
good. Is that a listing and sales tangent? Because I'd like to.
Let's keep it moving.
Yeah.
Good.
So, 12,850 homes were approved for construction in January. That's roughly 25% below the decade average, and well below the 20,000 average monthly run rate of approvals required to hit the government's target of 1.2 million new houses in the next 5 years. So at the same time, residential construction sector is running up against, as we know, shortages in labour, high material costs, and depressed profit margins. On the demand side, we've had our highest rate of growth in Australia's population, 2.5% over the year since 1981. So not just the biggest number, but the biggest percentage.
Yeah.
Since 1981. Raw numbers, that was 659,000 people. And over the same period, there was about a quarter of that many new dwellings approved, 173,000. So that would, on average, there's 2.5 people in every home, talking about formation rates.
Yeah.
That ratio requires there to be 3.8 people living in every home for there to be a home available for everyone who's moved in the last 12 months. So, these are the numbers that drive, some of the key numbers that drive this undersupply and the really low vacancy rates.
Yeah, agreed.
I think it puts pressure on everything, house prices and rental prices, especially rentals.
Yeah.
What can we...
And jobs, with unemployment going down surprisingly, inflation not coming down as rapidly as we're expecting, and now that they keep pushing out the date of the expected rate rise to the point there's much more talk there may not even be one this year.
Yep.
Yeah, my call of maybe August, probably September is looking worse and worse, which I'm happy about. So we've got some sales data, no listing info from the March pack from CoreLogic, but we do have some property listings from SQM, which was released a week ago. Any particular takeouts from UK?
Mike, we do have a little bit of volatility here, but we can see where we had a slowdown for Easter. And of course, vendors don't want to have a campaign spanning Easter, and they certainly don't want to have an auction or peak listing activity during the Easter break. But we're generally humming a little bit above the 6-month moving average. If I could put a special request out to CoreLogic, I'd love them to share the listing activity with us again. They've stopped doing that, so all we've got is a sales outlook, and there's definitely a correlation. But if we could get some of those early market forecasts in terms of agent appraisal activity and then listing activity, we could share a lot more with our listeners, that's for sure.
Yeah, the CMA data they seem to share as like an ad hoc thing. That'd be nice to be a monthly kind of index, because there's a lot of property nerds out there, CoreLogic. They're yumming up your stuff. Don't make us go hungry.
Maybe we need to pay for it. That might be the issue.
Oh, yeah. Well, in that case,
that old chestnut.
Forget that question. Distressed listings is telling a little bit of an interesting story. So we're only looking at the February 2024 data rather than March, but we've seen a little bit of an uptick in certain locations like New South Wales and South Australia, and of course Hobart. Or Tasmania, I should say. anything that we should read in there? I mean, these are still relatively small numbers across the country, right? We're not in housing
Yeah.
distress.
Well, if we look at the monthly change as a percentage and the yearly change, which is more important to focus on, in my view, longer range,
Yeah.
what we can see is that Victoria's leading the pack. Probably, sheds a little bit of light on the reasons why it's one of the symptoms of our lackluster performance. 14.8% increase in distress listings over the 1 year period is a considerable figure. And I thought that we'd weathered the storm really well and had low distress listing numbers, but it has ticked up. Even in the last month, it's ticked up almost 10%. And we're not talking peppercorn numbers. We've got over 1,000 distressed listings. I know we're a big state, but distress is a big word. The other one that's come close to us is Northern Territory, but they've only got 111. So I would argue that the data's not really sufficient for us to be drawing any parallels there. So Queensland, WA, South Australia and ACT are all showing that they've had a marked decrease in distress listing figures over the year. And nationally, we're looking like we've improved 14%. But yeah, Victoria at 14.8%, I'd say there's a little bit of warning bell or symptom there.
And that might have fed into the March print at 0%
Maybe.
growth. Who knows?
Yeah, because they're not the properties that I'm buying, clearly.
Another part of the question should be, looking at the numbers, is do distressed listings really provide a reflection of the overall property market strength? Because as we've touched on before, Queensland is a much smaller population than Victoria, but its distressed listings is much higher. It's got 1,712 distressed listings versus Victoria 1,025. Yet Queensland's property market is going gangbusters at the moment, and particularly Brisbane. So, how much of a correlation is there between these numbers on a macro level versus an annual change level, versus what's actually happening in the overall property market?
I actually think total property listings is the one to look for if you're wanting to get, a better helicopter view. And if we have a look at total property listings, whether it's monthly change or yearly change, Sydney and Melbourne, we're up. Canberra's very much up, and as is Hobart. But the ones that are down are Brisbane, Perth, Adelaide. And Perth is 27% down as a yearly change figure. That suggests that they've got an undersupply, and it's certainly part of the fuel for the growth that we've seen.
Yeah, 100%.
I think everyone that wanted to sell probably has already, trying to lock in the growth, because people might worry that it is the top, or even if they don't, they're like, I've made 20% in the last, 14 months. So now's the time to go.
Yeah.
What about sentiment? That was a really interesting print. We've just got consumer sentiment come in for April.
It just landed 2 days ago.
Look at that. We're hot off the press.
Thanks, Anne-Marie.
Yeah, Anne-Marie, you're a good egg. If we have a look at the house price expectations index, it's jumped again, and we're looking at a 23.7% increase in the house price in expectations index. That was a huge one for me. And, on the other side, interest rate expectations index has gone negative about the same amount as well. What do you guys make of the sentiment print?
Look, I thought if we're looking at monthly changes, it hasn't done very much. Time to buy a major household item has come down a little bit. Not crazy, but 6% for the month. That'd be great if that was a pattern that we'd seen, because that was the whole issue with inflation. We kept buying stuff. But I think it looks like it's stabilised in terms of how we all feel about housing and about interest rates and about the future. This was actually the most boring chart that we got in terms of looking for some kind of change or trend.
Yeah, look, on the city level or the state level, there's some interesting information. So in terms of time to buy a dwelling index, South Australians have got more negative on that by 14%.
Right.
And Queenslanders have got more negative by 10%. So they're both in South Australia and Queensland starting to feel that the property market is overpriced there. So that's an interesting insight on the state level. And then actually just on the Melbourne level, Melburnians are the most upbeat in terms of time to buy a dwelling index. So again, just another little price signal that even the locals feel like it could be a good time to get into the market. So Melbourne's 86.4. It's the highest recording of all the capital cities from the locals who think it's a good time to buy a dwelling.
So we weren't prepared to call the top of Perth, but I think we might be prepared to call the bottom of Melbourne. And who's brave enough to join me?
Look, I think the bottom was a little while ago, but forgive me if you think I'm biased. I try very hard to be objective, but I do genuinely think that the best time to buy in Melbourne was probably late last year.
Yeah, I think we actually might have even said that in an episode. You might have said those exact words in an episode towards the end of last year, Mike, and I think we agreed.
Yeah, because you can't buy the data, right? You can't buy the core logic index. That's not it's not a traded commodity. So you're forced to buy actual properties in the actual market, and that's what Cate's talking about, not data lagged. So yeah, that's an interesting one, but let's say we'll call it the bottom of the data, perhaps. Now, we've only got a few minutes left, but I wanted to look at some data that you've highlighted, Cate, which is really interesting, and it gives us a state focus as well. And that's the proportion of new lending for investment housing, and thankfully it excludes refinancing because it's been a refinancing renaissance in the last couple of years. But when we look at that on a national basis, we are above the long-term trend line, which I think is a 10-year trend line
It looks like
at
10 years, doesn't it?
34%. Yeah. And you know, it's only really, I mean, we had a little blip in 2022 where we trended above and then it went back down. But, you know, all the way from sort of the end of 2017 to sort of the beginning of 2022, we were well below the lending for new dwellings. But now we're up. It seems like we're trending up at 36%. What's your read on that?
Well, I love this chart because it has a state breakdown, and what we can see is that, you know, for New South Wales, for example, they're at 41% or 41.2%. And for WA, they're at 35.9%. They're big numbers, particularly when we think about the 10-year average nationally being 34%. We've definitely had an uptake in investor activity. But if we look really closely, Victoria's at 30.7%. Now that's under the 10-year average, and you can see on the Victorian chart that it's, you know, really tapered down. It's Queensland and WA and South Australia that look like they're shooting for the stars, and all of this is correlating with stock supply, capital growth. It's incredible how they've all weaved together, and what it tells me is investors are playing a pretty big role in some of those markets. As you said before, Mike, the only thing that's given me a little bit of comfort about Perth is that the vacancy rates and the yields. Obviously, the investor activity is getting soaked up by a genuine need. But yes, we have stronger investor participation. And dare I say it, I anticipate that we'll have you know, a political agenda there, and we'll start hearing about it soon, especially if these markets continue to be heated. I think there'll be a bit of a focus on investors. And if we hear any noise out of, you know, Perth or Adelaide or Brisbane about first home buyers being hard done by, we might see some proposed, you know, state government incentives and activity.
Yeah, incentives would be nice instead of the other stuff. Dave, what speaks to you in this data? Because if you look at the graphs on a state by state basis, they're all telling sort of similar stories, except you've got places like Tasmania, which is kind of lumpy and relatively consistent, whereas you've got, you know, things like New South Wales, Victoria, you know, Queensland. We're a lot below the peak in sort of 2015, where in New South Wales, like, we're talking about 55% of new lending being for investment, and you know, we're at 41 and trending up. But what does it say to you?
Yeah, look, I mean, I think it's a reflection of what's playing out in the property markets. There's a number that I keep, which I have in one of my sheets, which actually refers back to this recording, because I have it as a benchmark, which was a high watermark when all investor lending was at 46%. And that's when they brought in the changes to capping the number of interest-only loans. It's when they brought in the changes to capping investment loans growing by more than 10% with the major banks. And so it gradually came down from that point, and that'll be that 2015 high watermark. So, it had sat around that 34-ish for a while. It's jumping up to 36. So more, was definitely seeing more investor activity. And then these numbers are playing out. Victoria and Tasmania are being softer, and you can see that in these numbers. Whereas, we know WA is on a sharp rise, and South Australia is on a mini growth. So it's just reflecting what's happening in the capital growth figures, isn't it?
Yeah.
Yeah, I think so. Now, before we go to the gold nuggets, there's a couple of things that we haven't talked about specifically. Wage price growth. I mean, it's still trending high. We're still at, around about quarter of a decade increases in wage prices. Unemployment we touched on a little bit. Obviously, we've got a slight movement for the month, but 3.8%. Is there anything else that you guys wanted to highlight in some of the ABS data or bonds?
No.
Look, just unemployment was a surprise. They were predicted to continue to rise, and it fell down to 3.8 or 3.7%, depending on which number you're looking at. And I think, that big takeaway, which I mentioned earlier on, that the money markets are pushing out the expected date of the first rate reduction. Now, they're still pricing in that there will be one this year, and possibly two, but that's pushing out further and further. And that data is sort of being reflected in the US as well, which I think, they were betting on 6 or 7 rate reductions in the US and one already in April, and then that's dropped down to 3. There's some other interesting comments from the RBA. But look, at the end of the day, the likely first movement down in interest rates is pushing further out this year, if it happens at all this year. That's the sort of macro. Yeah.
Well, on that horrific note, thanks a lot, Dave. It's time for our gold nuggets.
Now it's time for us to go mining for our gold nugget property tip of the day.
My gold nugget is all about how you look at data and interpret what you're experiencing, because as I demonstrated, it's essential that we understand where bias could be introduced, whether it be a lack of data. So in other words, the data that I'm privy to is not necessarily representative to the general and average data out there, but also recognising that there are markets within markets.
Look, I think my gold nugget is understand the right price point for yourself. What's your strategy? Match up the property market and the property type to your price point and strategy, and go from there. Don't get too caught up in short-termism. Look to the long term, and if you've got a plan to hold the property for the long term, then it should dissipate some of the what FOMO that can go on when you're looking to buy. So I'm sure plenty of eyeballs are looking to Perth, and maybe there's still plenty to run there, but just try and make sure you're looking at the long term when you're making your property decision.
I agree. And I would say you can't buy the data, you have to buy a property. So the data is not always 100% representative of what's happening in that local market. And I think that's what we were talking about with Cate as well. So you need to know what's going on in the places you want to transact, and use trusted individuals in those places that have their finger on the pulse. Well, I think that was a whirlwind episode for our March update, and I look forward to seeing you guys for the next one.
So good to see you both.
See you later.
Cheers.
Bye.